Look at what you stand to miss if you didn't take your stance early. If you waited too long thinking if you can do this, if it is risky or if it is safe. Now, I want to give you a simple tip to learn about PSL and understand PSL, okay? Search PSL Co-work Network on YouTube so that you can access all the content I have been posting about PSL Co-work Network. Now, when you find a video on YouTube that's about PSL, all right, go to use the smart questions, okay, and let the AI summarize all the content. If you know you don't have the time to go through all the content that are now flooding, okay, YouTube about PSL. I've been doing this series, okay, so it's now becoming a load of work if you want to go through them all one by one. An easier way or a shorter cut to go through them is to go to the section for more, okay, and ask the AI questions. The AI already prompts you on questions that are ideal based on the content summary. Now choose those questions and look at what the answers are. You'll be surprised of how much information is already available about PSL. So if you are thinking, is this safe? Is this wise? Why not go and ask this question to the AI directly? I've already answered mostly all your questions in all the contents I have put out there. It's you now who has to go and find out for yourself. That is where research comes in. If you want to compare PSL with all the options out there, feel free. The smart AI on YouTube is going to answer all your questions for you. So you don't even need me to talk more about PSL. However, I'll keep doing my part. This series will continue. So I'll keep telling you more about the opportunities available in PSL. And it's your choice to choose, okay, to act, to join while the time is still, counting down to scarcity and loss of opportunity. You don't want that time to finish counting down, all right, when you would have lost the opportunity completely. Equity in PSL is scarce. I'm not guaranteeing that if you act now, you will get it, okay? There are criteria for you to really get them. So if you join as a stakeholder, you have to meet either within the first 720 of those who bought their first stakes, okay? If you are in the first 720, right now you do not know if you are within or without. So, but when you come in and show seriousness that you want to join PSL, then I will break the news to you, whether you still have a chance to own or not own equity. Now, even if you don't get to own equity as a stakeholder, all right, what you get in returns for your stake is good for you. All right, it can cover most of your needs. For example, in one of our core values department, which is shelter, if you were to buy up to 144 stakes in the first month, that would have earned you equity, and you missed equity because you came in late when the 50% of the 10% available equity for stakeholders has already been taken, then you'll be placed on our first receivers or beneficiaries of the shelter, all right, program. Which means with your stake, we are going to qualify you for priority access to our shelter program, which means that you will get a house from PSL. Houses are like assets that are durable. So over time, you can decide what you want to do, stay in them and come out of the renting cycle, or resell them or rent them, and make money on them. So it can become a substitute for the equity you may have missed out. But again, this is for those who wanted to access the first 50% of the 10% available equity for stakeholders and missed out because they came in late. You will now be joining the priority program for housing if you met the requirement for getting the same first 50% share, all right, in available 10% equity for stakeholders. So I am being fair with the distribution of equity and privileges or benefits for those who come in to join and support PSL's team or founding team, in building PSL to grow from the first year. All of these benefits of equity are available only in the first year. So which means if you actually didn't come into the first year, you are mostly late, because in the first year, those who have made their earliest contribution have already grabbed the total available share of equity. Since the reserve is for our 4 core value departments, it is from the reserved equity that we develop our shelter department, develop our clothing department, also develop our feeding department, and develop our income department. So we are utilizing our equity, the reserve equity that should have gone to external investors, now using them for social or community impact to our 4 core values departments. You see why now? So even when anyone may have missed out on the equity, they can still gain from the utility of the equity for community good, which is in our 4 core values department, since you have already allotted 40% of our reserve equity, for this purpose. Each of the departments get 10%. That is how we distribute the value of ownership to others outside, who join as stakeholders. So you get priority access to all of these core value departments. You see why PSL is different from 99.9% of all other programs you can support. So why not support an initiative that cares about people in a genuine way? PSL is that initiative. PSL is real, PSL is substantial, PSL is reliable, PSL is trustworthy, PSL is transparent, PSL is going to be there. Even when most of the other programs have run out, PSL will be there. So trust PSL and support PSL's growth, especially in the first year. But if you miss out of the first year's opportunities, then you're going to benefit from the general services, PSL is offering through its 4 core values departments. These are giving back to others who may have missed out. So absolutely, you may not miss out entirely. But these equities, if you miss out, well, remember,
we don't just talk about opportunity, we live the stories of people who choose to seize it and transform their lives. I am Francis Bethman Isugu, lead founder and steward of PSL Luxury Lifestyle Brand, the ecosystem built to deliver shelter with deferred luxury housing, professional clothing without financial humiliation, nutritional security that ends survival anxiety, and dignified income through training that pays from day one. If you are at a crossroads right now, staring at a decision that could redefine your financial future, your family's security, and your legacy, thank you for being here with me. Today, I share a real journey that captures exactly what many stakeholders are experiencing. I am at the crossroads to my destiny, building my empire of auto staking as a DFY PSL stakeholder on the Cashwap community. This is not theory. This is one member's lived path, anonymized for privacy, but drawn straight from the numbers and emotions unfolding in Cashwap A1 right now. They stood at the same fork most face. Keep playing small in traditional systems with high fees, slow payouts, and no real impact, or step boldly into DFY staking with PSL, where leverage, compounding, and community job creation turn ambition into empire. They chose DFY, guided optional, lowered daily effort, algorithm-supported execution, and invested $40,000 total in the 6-month compounding payout plan that broke down to $28,760 for the first month's $144 stakes, maximum per stakeholder under current mechanics, plus the modest $80 per professional training cost, all managed seamlessly by PSL. No need to hire, train, or supervise. Our team handles everything. The result, in the very first month, their staking directly contributed to creating 322 professional jobs. Real people placed in trading, training, and hub operations, and in predictable payroll funded by the ecosystem's engine. From month 1, the monthly payout due was $5,880. Instead of withdrawing, they elected the auto-staking compounding option, allowing PSL to retain and reinvest that payout for 6 full months, compounding at the DFY structure's proven mechanics. That consistent retention grew their effective monthly payout from $5,880 to $13,099 by the end of the 6-month period. That is not magic. It is disciplined leverage applied to a transparent, values-aligned system. Then the payout cycle began. 5 cycles from the end of month 7 through the end of month 11. Over those 5 distributions, the net returns on the original $40,000 investment reached 85%, turning the initial capital into approximately $65,000 in realized value. Plus, the ongoing compounding streams that continue beyond more. More importantly, those 144 professionals they trained and funded are now generating consistent value, paying monthly through their contributions rather than the stakeholder paying salaries out of pocket. PSL manages the entire chain, training via Power 40 method, placement in trading and hub activity, payroll stability. The stakeholder simply stakes DFY, compounds and watches impact and income multiply. Let us pause and feel what this crossroads really means. Before PSL, this member was juggling gigs, watching platforms take 10 to 20% cuts, waiting weeks for delayed payments, and feeling the weight of precarity. No shelter queue priority, no styling support, no food security buffer, no predictable income. The pain was real. Doubt about tomorrow, anxiety over family needs, the quiet fear that ambition would never break through. Choosing DFY wasn't about avoiding work. It was about choosing velocity. It was saying, I want my time, my capital, and my contribution to compound, not erode. Navar Ravikant captured the principle perfectly. You are not going to get rich renting out your time. You must own equity, a piece of a business, to gain your financial freedom. In PSL, DFY staking gives you exactly that. Equity-like ownership in the ecosystem's growth engine. Trading activity, arbitrage spreads, masterclass fees, hub operations. Without the solo grind. Your stakes fund professionals who execute. Their output compounds your returns. The 4 core values become accessible sooner. Compare this to traditional staking or investment platforms. High-fee mutual funds or retail crypto plays often deliver 5 to 15% annual returns after costs and volatility, with 0 job creation, 0 community impact, 0 tied to real departments delivering shelter, clothing, feeding, and income. PSL's DFY auto-staking plan, by contrast, delivers 85% net over 11 months in this example, while directly creating 322 jobs from one stakeholder's entry. That is not just financial return, that is civilization-level leverage, one person's decision rippling into dignity for hundreds. Emotionally, the shift is profound. This member described the moment of choosing auto-staking retention as the day I stopped surviving and started building empire. No more watching payouts disappear into daily expenses. Instead, watching them grow while sleeping. No more isolation in decision-making. Instead, partnering with PSL's expert team and algorithm. The compounding wasn't just numbers on a dashboard. It was proof that dignity scales, more jobs funded, more families secured, more jobs possible down the line. Time plays a starring role here. The 6-month retention phase felt long in the moment, but it brought the velocity later. 5 payout cycles delivered the bulk of the 85% net return in just months 7 to 11. That is the power of patience in a leveraged system. Short-term discipline creates long-term freedom. Jim Rohn reminded us, we must all suffer one of 2 pains, the pain of discipline or the pain of regret. This stakeholder chose discipline, and regret is no longer part of their story. The empire extends beyond personal wealth. Those 144 professionals aren't abstract, they are real co-architects now earning, contributing, and assessing the 4 values themselves. The stakeholders' $40K became a flywheel, funding training, generating trading output, compounding returns, enabling more stakes, creating more jobs. This is how PSL scales, stakeholder by stakeholder, city by city, dignity by dignity. For anyone at their own crossroads, recognize the fork. One path is familiar, slow, high friction, limited impact. The other is DFY staking in Cashwap A1, guided, compounding, job creating, values delivering. The numbers in this story are not outliers. They reflect what maximum staking with auto compounding can achieve when aligned with PSL's mechanics. Peter Thiel's definite optimism fits perfectly. Don't hope for a better future through vague effort. Build it with concrete plans. DFY is the blueprint. PSL provides the execution. You provide the stake. The result? From $40K to $65K plus in realized value, 322 jobs created, ongoing streams, and a legacy of contribution. This member's story is your mirror. If you are feeling the pull, the quiet voice saying, "This could be me," honor it. Calculate what waiting costs. Another 6 months of status quo or 6 months of compounding toward empire. As we close, let Naval anchor us again. Seek wealth, not money or status. Wealth is having assets that earn while you sleep. In PSL, DFY auto staking, your assets earn, professionals work, jobs multiply, and dignity spreads. While you build the life you were meant for. My heartfelt call today. If this crossroads feels like yours, step forward. Explore DFY staking options in CashWap A1. Review the 6-month compounding plan. See how your stake can fund professionals and compound returns. Reach out via WhatsApp 0810-2427-303 or in the community. We are here to guide you through alignment. Your empire isn't waiting for permission. It is waiting for your decision. Build big, live well, move fast. Together. Thank you for being here. If this story moved you, share it. Someone at their own crossroads needs to see what is possible. I will see you building. Welcome once again, like I mentioned earlier. PSL is currently open to stakeholders who have the opportunity to earn from its founders' equity, even though it is not guaranteed that everyone who becomes a stakeholder will earn. If you were among the first 720 stakeholders who supported PSL's first hub opening, then you have your chance of getting equity, and there are 2 ways you can get equity as a stakeholder. Firstly, if you fund 36 maximum stake per week and repeat it 4 times in the first month, then you qualify for 50% of the 10% reserved equity for stakeholders. But if you couldn't fund up to 36 maximum stakes in your first week, but you could fund any other amount of stakes in your first week and then continue consistently in the first month, you then have a chance of being part of those to receive the next 50% of the 10% equity reserved for stakeholders. So the numbers here make it different. Only 20 stakeholders can get the first 50% of the 10% equity reserve for stakeholders. The next 50% is for the next 720 stakeholders. So it's either you are in the smaller number sharing 50% or you are in the larger number sharing the same 50%. This is a fair game for those who can come in. It is to encourage many persons to do the most they can at the onset. Remember that PSL does not ask anyone to unnecessarily promote it because we already have a team of promoters who are invited to join the team for their own equity. So joining as a stakeholder does not mean you'll be promoting PSL otherwise. Only your stake do the work. In fact, being a stakeholder has no other effort required of you. Once you have funded your stake, we do the rest of the work for you. That is why it is called done for you. Why we have the DFY option that allows you to do it yourself when you want to experience the same system we use. We only help you set it up. Once set up, you follow all of the instructions. So your job will be to follow the instructions and execute the instructions for staking every day. Then wait for the outcome, control the account that you are using to place your stake within. But you pay our monthly membership fee, which is $80, funding our staff as we continue to provide you the setups required to make your funds yield returns in weekly payouts of 85 or up to 45% rather. Whereas if you joined the DFY option where it is done for you, then you enjoy monthly payouts of 20%, which you can compound. So when you choose to compound it, then you earn up to 85% final returns. Because when compounding, it means you are funding to maximum, and funding to maximum also means you can choose to auto stake. When you choose to auto stake, it also means that there will be a compounding returns, okay, which allows us to get more professionals trained, okay, into the ecosystem's operation, and then you benefit from the net return, which is 85% after receiving your full payout. So calculating the total of 5 payouts after compounding months, that is from month 2 to 7. Then you receive 5 times payout. So after you receive your final 5 times payout, you are already done with the plan. So you can now decide to renew the plan again with all your stakes renewed for the next year. So this is how PSL works for stakeholders. Stakeholders are free to enjoy the benefits of participating in PSL. You do not need to become a promoter as a stakeholder. So we are ongoing in receiving stakes from the first 720 stakeholders. Is still open right now, but does not have any guarantee. At the time you might be responding, we may have already reached our number. So but we are going to make a major announcement once we reach that number of 720 stakeholders, which means if you've not seen that announcement yet on our Fixed Flip Data Right channel, it means that we have not yet reached that number. Since I celebrate every milestone, I'm going to make the announcement and you are going to learn about it. So right now, without that announcement, the opening is still there.
Welcome to this session from the Power 40 Scientific Trading School. Today's lesson we want to talk about the dangers of hasty conclusions or hasty generalizations. Here we want to note that nothing happens in the market without a justifiable basis. Nothing happens in the market arbitrarily, or nothing happens in the market randomly. The market is an ordered sphere. Everything happens with justifiable basis. So let's understand how when we miss construe the events in the market, that is, everything that happens in the market can be called events. When we misconstrue these events, we are prone to making wrong projections. And the market will always play into our levels that are based on observable projections, counter projections. So in every projection there is a counter projection, and because we in the scientific block, that is in the Power 40 Scientific Trading School, we have price sequences that are used in projections. The opposite becomes the counter projection, and counter projections, if they were the real projection, have their corresponding basis or levels. So when we draw out the two opposite projections, we have to define their levels. Okay, so every projection has key levels of price sequence. That's what we mean by their levels. So if we have a buy price sequence, which is called buy fib 0, that corresponds with the market direction towards the break of a sell deviation limit. Okay, so a sell based deviation limit. We are also going to have a sell projection, okay, or sell price sequence that is based on and correspondent with the buy base deviation limit break. So these two things are usually playing out at the same time because of the event's time of formation. Typically, we have a buy and sell sequence forming in a loop, one after the other. Then while they form, there will be an existing base or a yet to form base. So when the bases have not been formed, either the buy base or the sell base, we trade into what we call the pre-DL, okay, where we only use the corresponding price sequence that has its fib arrow broken first. But when the bases form first before the main fib sequence, it means we have to play in the line of the basis formation. So on a day like this was the 17th of June 2026, and on the right hand side here, the 18th of June 2026, something happened in between these 2 days that exposes how we are prone to misconstrue the events in the market, especially if one occurs first before the other. And the market intentionally also shows us this so that our minds and its convictions could be altered, because if our minds are not altered, it means we can read all steps of the market using our scientific trading method. So we need patience, okay, not hasty conclusion. That is the essence of this lesson. How do we apply patience? So let's go into showing us what happened. Okay, firstly, we had the day form two bases. That's going back, we had the day form two bases. Okay, now all the moves that happened in the day have to be market moving towards the basis, market meeting the deviation limit of the basis, and market breaking one of the deviation limits of the basis, because according to the Power 40 Scientific Trading Method, until one of the basis deviation limit is broken, the market cannot make a trend move. So the market would be in a correction / expansion phase until a trend phase forms. Okay, so now we had a week. This was Wednesday, Tuesday, and Monday. Okay, we had a week when the market did not choose sides of trend, and starting from Monday, we didn't see a side of trend chosen. Tuesday, we didn't see a side of trend chosen. Okay, we saw sideways market. Then coming to Wednesday, when the move actually started, before the Thursday, which is the 18th of June, we now saw the market form its basis, and now, having formed its basis, the market delayed to break the deviation limit of the basis. So we had what? Firstly, the sell base. Okay, the buy base formed first, and its deviation limit was now set as 4335.43. This is where the problem started. Okay, now when its deviation limit was formed at 4335, the market made a down move first during the day and did not come to break or touch the buy base that formed first. So we observe the market now trailing upwards. Then the sell base formed with its deviation limit at 4377. Okay, so the next move was the market moving towards the sell base and getting all the way up to 43. Look at that, getting all the way up to 4360. So at this point, the market kept moving upwards until it got to the first base to break, which was the 43, the first deviation limit, which was the 4377, and this was when the break occurred. But what happened next was where the confusion began, where we begin to interpret what we see wrongly. What happened next was the market gained momentum on the return to test the broken deviation limit, which we know the rule saying that once the deviation limit has broken first, that becomes the direction of trend for the day. And clearly on this day, the deviation limit that broke first was the sell base deviation limit, okay, at 4377.77. So when this break occurred, there was yet no break below 4305. If you look at it, no break below 4305. Okay, so all the way here, there was no break. But what happened? The same immediate occurrence of a break above the sell base deviation limit gained momentum. Okay, price dipped in one push to break the buy base deviation limit. And now what happened next? Having broken the two bases in a space of 30 minutes, broken in a space of 30 minutes, firstly broke the sell base, next broke the buy base deviation limit. Okay, so the previous 15 minutes broke the sell base at 4377, use deviation limit, and then the next 15 minutes broke the buy base at 4305. Okay, we are now going to have two things to worry about. Firstly, we observe clearly that the sell base deviation limit had broken first, which means we will be looking for a buy entry. But at the same time, the market came to break the buy base deviation limit. So in this case, where do we go? Because the market doesn't always do this. Okay, so either the market had engaged the buy base deviation limit, rejected, did not break, then go to break the sell base, which means that we're going to have a buy entry. Okay, or the market begins from the sell base deviation limit, rejected but did not break, and then come to break the buy base, which means we're going to have a sell entry. But in this case, the market broke one, then came back to break the next. So what do we do? So this is where the hasty generalization comes in, or hasty conclusion. So here we could fall into the dish or trap of choosing sides when the market has yet to show us which side to choose. In this case, there is confusion, so we do not have a bias yet. Okay, but let's say that we chose the buy. Did the market give us a buy entry? Let's look for where our buy entries will be. So this was the break into the base level. Okay, and our entry is going to be from the broken base having been broken at 4377. It means our buy entry is going to be at 4357. Okay, when the market returns above that base, we call it ROEL1. Okay, then we are going to buy. So here the market 4350, the market did not come into that level, rather the market went down far below all other ROEL2 and ROEL3. So we have 43 4357, 4337, okay, and 4317, all of which we are broken. Okay, so now let's say that in coming to 4337, we saw an opportunity for a buy, right? Where will our stop loss be? Our stop loss will be at 4297. Okay, so but what happened? We took the entry here. So we have firstly interpreted this, first of all, towing the path of what? The buy deviation limit. Okay, sorry, the sell deviation limit that broke first. So it means that our last entry, ROEL3, was meant to be at what? 4317. So 4357, 4337, and 4317. These are the three levels of buy entries, okay? Based on we following this first base to be broken, this division is at 4377. So what happens? The market now comes to 4317, fulfills the condition for entry, breaking above it, okay? And that was the break above it. So here we will be excited. Now we are going to have our entry, right? So market will come down to pick the buy limit at this point at 4317. But what happened? Again, just as it did here, the market did not just come to pick the buy limit, but did what? Move all the way down. Our stop loss first of all for 4317 will be at 4297. So what did they do? The market zoomed down and hit the stop loss and went past the stop loss. So firstly, invalidating the buy. Okay, firstly invalidating the buy. So in this case, we should learn from the market that it has chosen its side, not the side we chose. You see, so from this point we should correct ourselves. So we only risk one entry rather than three entries, because we had ROEL1 at 57, ROEL2 at 37, and ROEL3 at 17. So one entry has been risked. How much has gone here? $20. But this would have been $60 if we are trading based on level. Okay, so this would have been $60. So for doing what? Being quick, rather than allowing the market to choose size and let us see. So but what if we now said, okay, one side is looking for a buy, the other side is looking for a sell. So the side that is looking for a sell haven't seen this momentous break of the sell or the buy base division limit, which gives us what? A sell entry at 4305. Okay, our ROEL1 will be at 4325. Okay, so let's look at that. The market came where? To 4323, did not break 4325, which means did not give us the sell entry at this point, but it came into the sell entry zone. Since we are not trading pullback, okay, the market first of all engaged the sell level and showed respect for the level from ROEL1 for the sell, and you can see the strong wave. This was market touching 4326, which means it's rejecting 4325, showing respect for the sell ROEL1, whereas it didn't show respect for either of the buy ROEL1, 2, and 3. So in the market's own choice, the sell levels were more to be trusted than the buy levels. So in doing this first and next, market chose the most recent over the past previous. Okay, so chose the most recent over the first. You see here in this case. So since this happened in this order, we are now to play in the direction that the market itself has chosen, not in the direction we ourselves have chosen. So now that we have seen the correction is that we are not buying, rather we are selling. What will happen in the new day? So we now see the new day coming. Okay, since the market failed to give us the entry here, the market now returns back in the new day to get into 4325, which is our ROE. Remember, our entry rule is that market should break above the level, then break below the level if we want to sell, and then we'll have our sell limit order place. So here the new day started. Okay, as the new day started, we observed the new base formed. Okay, and we now have our deviation limit for the first sell base that formed at 4396. So 4296. Okay, 4296 will be what? Our buy. But at the same time, we now also had a buy base, okay, at 4275, which puts its own division limit at 4245. Okay, and you clearly see for the new day, where the market has not given us an entry for the previous day, the market did what? Still in the order of hasty generalization, the market went to break once again the buy base deviation limit for the day. Firstly, the order of buy and sell base formation is inaccurate. Whenever we have a buy base, we are expecting that we are going to have a sell base, okay, above a buy base. But in this order, we saw what? A buy base, okay, above the sell base. And that is not the correct order for base formation. So, but we could have missed this by focusing on the sell base and then not realizing that in the sell base formation, the buy base must be below the sell base. But what happened? The market formed a buy base above the sell base. So it means that we should have ordinarily anticipated the formation of what? A buy base below the sell base, which invalidates the base we have formed here. So now, if we read it right, we cannot be expecting a break of what? A sell base deviation limit until there has been a formation of what? A correct order of a buy base. So which means what we should be expecting is to see a buy base form correctly, which means forming below a sell base, and all of this why price has stayed above what? The sell base. So we cannot be talking yet about the break of the break of the sell base when there is no break of what? A buy base, or when there is no creation of a buy base. We cannot be talking about what? The breaking of a sell base deviation limit or a new trend move when there has not been what? Corresponding base formation. So which means all our projections would have been, when will the market come to create what? The new correct buy base. Okay, so put that straight. What the market was doing here was now returning to the previous day's ROEL. So this is now correcting our erroneous view of what the market was actually doing. So if we wanted to read right, it means that we are waiting to see the formation of what? A buy base, and at the same time we are seeing price moving towards our entry level ROEL1 of the previous day's broken buy base division limit is ROEL. So this is when that happened. Now, because we have been corrected, we now know that the break above 4325 signals what? Opportunity for a buy at what? 4325, because the market returned to break below 4325. So which means that we're going to have our sell limit rather. Okay, so again, the break above 4325 signals our opportunity to wait for what? A sell, not a buy. So let's correct that, since it is our sell level. Okay, so now the market comes what? Closing below 4325, which calls us in. And let's look at how the market now respects that call. You see that having shown the break above and the break below, this is the entry candle. We place the sell limit, and what happens? The market is respecting the sell limit. Again, see how many times the market shows respect for the sell level. Okay, and that was when the move downwards started. So at this point, we should have known that the market is trading in what? The previous day's levels, which gives us a projection to the downside, taking price back down to 4225. Okay, and if you notice, 4225 is going to bring back price down below what? The sell base that was formed, okay, at 4266. You see that? So that is a correct order that the market itself is structuring. It is not random. And when did we see the first formation of a buy base below the sell base? It was after the market has drifted down to 800 pips. Okay, that was when it formed the first correct buy base. And at this point, the market formed the buy base and has not broken the deviation limit. So where would the deviation limit be? 4212. You see. So at this point, 4212, the market bounced, okay, having formed the buy base, and has not yet tested its deviation limit. So from this point, we will start looking for which of the bases will break. So if the market wants to break finally the initially formed sell base deviation limit, the market will need to rise all the way up to where, having formed the buy base, okay, the market will have to rise all the way to a deviation limit at 4297. And let's look at the market attempt at rising. After forming the buy base, the market stopped at where? 4277. Okay, and rejected 4277. So what is 4277? 4277 is ROEL2 of the first formed cell base. Okay, if we are expecting that this was a break that happened at 4297, okay, if we are expecting that this was a break that formed at 4297, it meant that if we want to trade buy, we're going to start from, let's look at that. Okay, we're going to start from 4257. This will be, okay, sorry, we're going to start from 4277. So this is our ROEL1. Okay, then we are going to have 4257. This is our ROEL2 if we want to trade the buy. Okay, but that will be that market has broken what? The deviation limit of the sell base first, which happened here, but this is invalid where the market has not yet formed what? The buy base. So you see now that when the market went up, it rejected the buy base. Okay, it rejected what? The sell buy ROEL1, telling you that the market is not willing to go into the buy. So the market is showing its footprint even when you are expecting something different. Okay, the market is what? Showing you its footprint, and the footprint is always corresponding with what the market has done before and what the market is doing right now. So what do we do next? It means at this level we are not going to see a buy. We are going to expect that the market is going to come what? To sell, whereas we had already started calling for what? A buy. So right now the market has formed the buy base. Okay, its deviation limit will be at what? 4211.80. now what do we expect? We first of all expect the completion of the previous day's ROEL level that gave us our entry in the new day. So when we had our entry from the new day, we are going to expect that this entry is going to first of all go to its full take profit. This is not the take profit. The take profit is still at 4227. Okay, 4227. And right now the market has not gone there yet. The market only bounced off having created what? The first accurate buy base for the day at 4242. So which means that we expect that this market is going to complete the move firstly down to 42. Let's look at that, 4227, and that has not happened yet. So it means every other move we are looking at is what? Trading a continuation of this sell. But we already have the sell entry from ROEL1 for the previous days sell, for the previous days buy base deviation limit that was broken at 4305. Okay, its ROEL1 will be at 4325, and that is what the market is showing. So the market is playing accurately corresponding with the levels for entry. That's retest of entry level 1 based on the break of the deviation limit of the previous day's buy base. Okay, and remember that happened from a mixed event of firstly breaking what? The sell base deviation limit at 4377 and then returning to break the buy base deviation limit at 4305. So our job is to place our entries corresponding with the exact choice the market is making, not the choice we are expecting. So what will make us to contradict the market and suffer countless or multiple loss or missed opportunity of entry at the correct level is sticking to our own bias about the market's decision rather than allowing the market to teach us. So when we stick to our own bias, we form what is called hasty conclusions, and those hasty conclusions lead to serious losses. So if we had made the first mistake at this point, when we saw the market did not show respect for our entry levels for a buy, we should have known that the market is not willing to buy. Okay, and we start watching for whether the market is going to sell. Once the market went above 4305, we are now supposed to be expecting that the market is going to do what? A sell order. And this would have been first attempt at entry if we wanted to trade it as a pullback. However, since we placed our entry based on retest and then break above or inward break and outward break, okay, so break out and break in, then we enter on break in the direction, okay, of the base that was broken. So it means that we will not have probably taken the sell entry level here, but we would have taken the sell entry level here and projected our take profit to what? 4225. So Has the market moved to 4225 yet? Not yet, but the market has gone very close before forming what? The buy base. So the buy base created a counter momentum, okay, to bounce backwards. But going backward, the market now is avoiding to give us what? The entry levels for entry level 1, because entry level 1 would mean continuation, or rather beginning of the new trend projection for the day. So the market has not given us entry level 1 for a buy, but the market has been playing into entry level 1 for a sell. So what do? We should continue trading the sell entry level 1 until the market goes to what? 4225. So once we have seen the market at 4225, then we can begin to what? Expect that the market is going to form, make a decision for the new day. So the day's own event for the trend choice of the market has not begun yet. So we cannot make that choice for the market. The market has to make the choice, and we have to follow the market's own choice. So if you notice here, the market wanted to test our understanding of its rules for movement, okay? And clearly the market was showing us its footprint. So our job was to take the instruction from the market, not to teach the market, because we cannot teach the market. And if you notice here, the market is not disorderly. See how the market returned to the ROEL 1 of the buy, okay? That is not serving as a buy. But for those of us who are focusing on the buy, the market is showing us that this I am not going to buy by rejecting it. Because if the market is going to buy, it's going to break above, then return back, okay? Because it has already broken out, so you have to break in. So it failed to break in at ROEL 1. So we choosing ROEL 2 here would mean that we are ignoring the information of rejecting what? ROEL 1. Because market firstly has done what? Broken out also of ROEL 2, then break back in of ROEL 2. So here, if we wanted to buy on this ROEL 2, it means that we are rejecting the information of market rejecting what? The ROEL 1, that the market failed to break in. So where we fail to have entry at ROEL 1, hoping on entry on ROEL 2, when the market is giving us a counter information of rejecting ROEL 1, means that we are not paying attention to the instruction the market is giving us about its footprint. So when we are not paying attention to the market, we are going to be basing our entries on what? Hasty conclusions that will lead us to multiple or serial losses. But when we follow exactly what the market has done, okay, we are now going to do accurate projections. So this is not a problem that is we'll say that we are to take the blames for. Okay, this is the problem of logic, and logic requires careful observation. That is why in the Powerful Scientific Trading School we use a scientific method of what? Observation, interpretation, and entry projection. If we do not have a correct observation, we cannot have a correct interpretation, and so we cannot have what? A correct entry projection. So what is the way forward to avoid missing the mark? The way forward is to look at what has happened already. What base has the market formed? Is the base formed in the correct order? What fifth sequence has the market formed? Which fifth sequence has the market shown respect for and broken? Okay, so when the market forms a base first, we focus on the base. If the market forms a fifth sequence before the base, we focus on the fifth sequence. So but for this day, the market formed a base first, so we have to focus on the base. Okay, now all this temporal move here, we would have understood that the market needs first of all to go back to the previous day's level. But if this has not happened, we cannot learn, we cannot take corrections. That is why this is important, that we make mistakes so that we can correct, we fail so that we can succeed. Okay, if we do not understand what we were doing, we will not know when we failed. We will be blaming the market for deceiving us, but the market did not deceive us. The market made a choice, and we did not choose with the market. That is why we were wrong. So this correction has to be taken. Now, if you want to apply this to make money for yourself, then you have to be part of the, let's go into the new program that we are launching, and that is the venture stakes. Okay, venture stakes funding for business owners who will become part of the PSL. Yes, stakeholders. So those who become part of the PSL stakeholders, because the PSL Cohort network is now coming back live to talking to stakeholders, bringing stakeholders together to funding the project of what? Those who are trained as finance professionals in the PSL Cohort network. So if you saw all of this as too complicated, that is because you do not have what it takes, okay, to do it yourself. So you need to trust the expertise of those who can instruct others on how to do it. And that is where we come in as the PSL Ventures Progenitor Board. So our job is to onboard new finance professionals who will use the powerful scientific trading method to work in new hubs created by the PSL Cohort network. So these new hubs created become what? New ventures that you can benefit from. So how do you benefit from them? You have to hold a stake every week in the new finance professionals effort to trade with the powerful scientific trading method, okay, in a weekly plan. So for you to be part of our new hub accommodates up to 20 new stakeholders weekly, okay, and we are still developing our first 36 hubs. So we cannot just keep opening new hubs without having stakeholders who will hold stake in each of the hubs. And since these hubs are for trained professionals to work using the powerful scientific trading method, okay, and generate income from the hub, you as a stakeholder become a venture funder when you hold a stake in PSL Cohort network. And what is a venture we are referring to? We are referring to the new hubs we open that needs what? 20 stakeholders. Okay, so every week we are creating new opportunities for you to hold a stake by funding one of the new ventures. Now you do not have to go create a venture, create a new business in order to multiply your income stream. All you need to do is to fund a stake in the PSL world, new hubs opening every week, so that our professionals can do the job, okay, while you get a part of the income that is generated as a way to multiply your own income stream. So if this has made any sense to you, then decide to work with us by choosing your own stake amount. How many stakes do you want to hold in the PSL weekly funding rounds? So we have up to 36 slots, okay, per person. In other words, we have 20 stakeholder slots, but for each stakeholder we have up to 36 slots per stakeholder weekly, okay. So it gives you multiple opportunities to fund a stake according to your financial capacity, which means that we are going to have more trained professionals to help us open more hubs and to help you earn more money through your own funding stakes in the PSL world, Cohort networks, new hubs opening. This is what we refer to as ventures stakes funding for business owners to become PSL stakeholder. So if you're not yet a PSL stakeholder, choose your stake today. Your stake is worth $280, $80 for onboarding and $200 for holding a stake that earns you 20% monthly returns for a 10 times payout cycle. That is a venture, so earning 20% monthly returns for a 10 times payout cycle. If you have funded one stake, you can fund multiple stakes every week and keep increasing your payout opportunity. That way, whatever funds you have earned from any other primary source of income can begin to generate more income for you rather than being spent on lifestyle that will not generate any income. So I remain Francis Bestman Isugu, the founder of the Power 40 Scientific Trading School, the inventor of the Power 40 Scientific Trading Method, the owner of the PSL Luxury Lifestyle Brand, and the builder of the PSL Cohort Network. Thank you.
Hello, everyone, and welcome to what might be the most urgent, life-altering conversation we've ever had in the PSL Cohort Network series. The moment where hesitation can cost you everything and decisive action can secure wealth for generations. I am Francis Bestman Isugu, lead founder and chief steward of PSL Luxury Lifestyle Brand, the self-funded dignity-first ecosystem, delivering shelter without predatory debt, professional clothing without humiliation, nutritional security without anxiety, and income with real predictability. If you are watching this right now and something inside you is stirring, a quiet voice saying this feels important, or even a louder one saying I can't afford to miss this, thank you for stopping everything to listen. Today, the title says it all. Last chance. Join PSL's founding team and secure your financial future. This is not exaggeration. This is math, scarcity, and timing speaking plainly. PSL is in the earliest, highest leverage stage of any successful startup, the ignition phase where the founding team and pioneers pour in the first work, stakes, and promotions to spin up the flywheel. Once that engine is running smoothly, equity becomes scarce, expensive, and mostly gone. The question every serious builder must answer honestly is this: if it is good for you now when you can afford to work with PSL, but you don't want to join now, is it when you can't afford it that you are waiting for? Too many people have already missed out on exactly this. They had today's riches, time, capital, energy, connections, but failed to convert them into tomorrow's wealth. They waited for proof, for certainty, for the right moment. And by then, equity was locked, valuations had exploded, and the only path left was buying tiny fractions at premium prices or settling for linear returns. PSL's future financial security for families, for communities, for entire cities will flow from the work and stakes happening right now. The founding team decides how feasible, sustainable, and massive this vision becomes by committing first. Your role is most powerful at this exact stage. Let us talk equity. Because salaries build lifestyles, but equity builds empires. In any startup that survives and scales 10 years, 1% equity vested over that period is worth far more than a decade of regular salaries. Why? Because if PSL pays salaries consistently for 10 years, it means the company has grown at least 10 times, likely much more. Salaries stay flat or grow modestly, equity multiplies with the company's value. The math doesn't lie. Founders and pioneers don't get rich from monthly checks, they get rich from owning a piece of exponential growth. PSL is self-funded through pioneer stakes, no external dilution yet, which means the earliest contributors capture the lion's share. Right now, 60% equity is already spoken for, 30% to the 3 co-founders, 10% collective pool for the 720 pioneer stakeholders per city, and 20% reserved for the first-year top performers in the Physical Hub Expansion Promotion Partners Program. The remaining 40% is held for future development across the 4 surface value departments. That leaves everyone satisfied who came in early and very little room for others who would come in late. And it is shrinking fast. Look at the revenue engine already in motion. Arbitrage alone, the 400 naira fixed difference retained per stake payout generates 11.52 million naira monthly per 720 units city block, scaling to 138 million naira annually. At 1% equity, that is 1.38 million naira per year from arbitrage in year 1, and it compounds as hubs multiply. 20 new hubs per year projected for the next 5 years via promotion partners. Add stake renewals, 10% benchmark scaling at 20 times, auto staking profit share, 55% hub retention from DIY conversions, projected $453,600 in first 6 months, scaling to millions. And excess gains, 1% equity starts small but explodes. 1 million naira year 1, 21 million naira year 2, 41 million naira year 3, 61 million naira year 4, 81 million naira year 5, 101 million naira year 6. Add those up, over 300 million in just 6 years for 1%. And it is compounding, not flat. Compare that to saving a 500,000 naira monthly salary untouched for 6 years, just 36 million naira maximum. The gap is staggering. This is why equity is the price. Passive, compounding, protected wealth that flows as long as the engine runs. Salaries reward efforts. Equity rewards ownership of the system. PSL's model is designed for unicorn potential without external capital requests. Private stakes, fuel hubs, trading expansion. That brilliance protects early contributors. But it also means equity is a depleting resource. Once locked for life, future investors, even millions of them, will scramble for fractions of 1% at massive premiums. If you wait until PSL has 36 hubs per city, 20 new cities per year, thousands of professionals, public listing rumors, and fortune-level valuation, you will pay the highest price for the smallest slice, or get none at all. Today, it is accessible. Low cost to enter as a stakeholder, fund stakes for DIY/DFY returns, or promoter, fund paid promotions for commissions. Either path, if you are early and contribute meaningfully in year 1, opens the door to equity consideration. Let's talk about more equity valuation and availability for those who join as stakeholders, because there's already a fixed amount of equity for those who join as promoters. So for those who join as stakeholders, yes, this is the founder telling you exactly what to expect. Why we reserve 10% equity for the first 720 stakeholders, it doesn't necessarily get to all equally. This is how it goes, right? So for the 10%, right, the first 20 of the 720 stakeholders who achieve from their stakes a maximum number of 36 stakes per week done 4 times per month. The first 20 who achieve this kind of stake volume will get 50% of the 10% available equity for stakeholders. That means if you are in the first 20 of the stakeholders in DFY who gets the first 36 stakes funded per week and do it consistently weekly for the first month, which means you achieved a total of 144 stakes. That means you are among those who will share 50% of the 10% available equity for stakeholders, while the remaining stakeholders, 700 stakeholders, will share in the remaining 50%. So which means even among stakeholders, there are more fortunate stakeholders than others. And this is on a priority basis. First 20 of the 720 stakeholders who contribute first 36 stakes weekly and are consistent in the first month, 4 times in the month, doing 36 stakes per week. The first 20 of the first 720 stakeholders who achieve this result of staking will get 50% of the 10% available equity for stakeholders. Then the first remaining 700 stakeholders who contribute any stake at all will share in the 50% equally. So it's an equality game. You play at your level and get the equity at your level. So you join the first 720 stakeholders, it means you are competing for a share of either 50% of the 10% available equity, or you are competing for a share of the next 50%. Okay, so you can share the first 50% if you are among the first 20 who achieve 36 weekly stakes and do it consistently 4 times or 4 weeks in a month, achieving a total of 144 stakes. You will be sharing in the first 50% of the first of the 10% equity available for stakeholders. Now, if you did not meet up with this cut, if you are anywhere less than 144 stakes in your first month, it means you are sharing in the remaining 50% of the 10% equity that has been sliced for the first 720 stakeholders. So either place, if you are among the first 720 stakeholders, you have your equity share already guaranteed. So co-founder roles are closed. Their 30% is reserved. For pioneer stakeholder and top promoter equity, access is still alive for those who act now. So once again, either path. If you are early and contribute meaningfully in year 1, this opens the door to equity consideration. Emotionally, this is the pain point, the fear of missing out forever. Many feel it. What if I join and it doesn't work? But the deeper fear should be, what if it does work and I stayed on the sidelines? The people who become billionaires in startups aren't the smartest or luckiest. They are the ones who recognized the window and stepped in when it was still open. PSL is that window. The flywheel is spinning. Hubs are expanding. Professionals are training. Revenue is compounding. Don't be the one who sees rocky soil and sells the gold mine under your feet. Jim Rohn said it best. We must all suffer one of two pains, the pain of discipline or the pain of regrets. Discipline today means staking, promoting, building with the founding team. This is a regret-free that buys tomorrow. A regret-free option that buys tomorrow. Regret tomorrow buys nothing. So you don't want to regret tomorrow, okay? Because if you don't buy now, you will regret tomorrow, which means if you have no part in PSL right now, you are most likely to regret tomorrow for missing out. But if you buy now, you are getting a regret-free tomorrow. So what are you buying? Buy either a place in the founding team as a promoter or as a stakeholder. Peter Thiel's definite optimism applies here. Don't hope vaguely for wealth. Build it with concrete plans. PSL's plan is clear. Self-funded scale, hub-by-hub growth, 4 values at dignity level, equity reserved for early co-architects. Your stake or promotions aren't just transactions. They are votes for the future and shares in it. This is my direct one-time question to you. Are you ready to support the founding team to build PSL in exchange for equity and immediate perks? Yes or no? If yes, choose your role. A. Fund PSL stakes and get DIY, weekly, or DFY, monthly returns as a stakeholder. B. Fund PSL paid promotions and get commissions per generated paid membership monthly as a promoter. Send your choice, name, email, and location to WhatsApp 0810-2427-303 right now. If you are early enough, I will personally congratulate you with the equity access still available through your first year contributions. The spots are limited. The window is closing. Tomorrow, someone else might say yes when only one remains. Don't let that yes be your own lost opportunity story. So you should rather be the one saying yes now so you don't lose the opportunity tomorrow. Build big, live well, move fast. Together, we are going to grow bigger. Thank you for watching. If this woke something up in you, share it immediately. The person who needs this most might be one share away from their destiny. I will see you building, or I hope I will. So, I have called you into PSL as the founder. I have already given all I can, mostly information and explanation. It is now yours to make a decision. I cannot make the decision for you. However, I cannot coerce you into making the decision right now. So weigh in the options. We might really be lagging behind if we don't get the fast response. Remember, first 20 who fund the maximum stake, that is over 144 stakes maximum in the first month. Remember, for each stake funded, there is an $80 professional training enrollment fee in our masterclass, which enables us to equip those professionals who will handle the stake for you. So we train those who will do the job for you so that you can spend time doing the other things you love or traveling around, knowing that you're going to receive your returns and your funds are in safe hands. Okay, but if you were going to do it yourself, then we only set up the accounts for you. Not exactly for you, but we're going to set up the account with you, show you how to go about the operation. So you'll be given a basic training, of course. Then you start doing the staking the same way our professionals do it. However, the system applied for the DIY is not exactly the leverage system used for DFY. That is the difference. Since we want our DFY to be leverage and low risk, because since it is done for you, the risk has to be as low as possible. We use a different system that does not get automated. Okay, because there are people who are trying to do the job. Since people are trying to do the job, the human elements of these people will have to be considered so that we don't expose our liquidity. Okay, we don't expose our liquidity to the possibility of a maximum drawdown.
To limit the drawdown, we use a leverage system, which allows us to focus on 1:10 risk to reward ratio or 1:6 risk to reward ratio, depending on the outcome of each stake execution. But for those who are doing DIY, it is more of a we call it high frequency, transaction. So there is a high frequency transaction required of the stakeholders. That is where the stakeholder needs to commit time. So you experience what DIY actually means. You commit time when doing it yourself. And this time multiplies your returns. That is why you get up to 45% weekly payout, you see. So if you didn't commit that much time, you could not get that much payout. That is the difference, Then if you wanted to stake more than the minimum stake, so for the DIY, you are working with a minimum stake, which is $200, and then your enrollment fee for the month, which is $80. You pay your enrollment fee once, while doing your initial setup with your $200 stake. Of course, you manage your stake yourself. But if you want to add to your stakes, you have to do it that first week of setup, not afterwards. So for the DIY, you are working with a minimum stake so that if there is any drawdown, it does not affect you too much. Since it is DIY, means there could be mistake. You could still be on your learning curve and you have not gained mastery or perfection. And it could take you about 6 months to gain mastery. So what keeps you, a boy that keeps you floating as a DIY stakeholder, is that you have higher volume of transactions. And these transactions could get up to 45 units of transactions per day. So which requires high time commitments, high amount of time, to commit to this. So for DIY, you are using time to make more money. While for DIY, you are using money to make more money. For DFY, you are using money to make more money. While for DIY, you are using time to make more money. So the more time you commit, with your minimum stake as a DIY stakeholder, we earn you more money, which is up to 45% weekly payouts of your minimum stake, which is $200. Then if you wanted to stake more, you need to do it within the first week of setup, which means for each additional stake you intended, that will be put on an auto staking program. That auto staking program is what will hedge you against burnout while doing it yourself. So this is like a backup plan for a wise person who doesn't want to get frustrated if the system becomes too taxing. So you have to consider a backup plan where if I fall asleep, if I am tired, if I am busy, if I am called for one meeting or the other, it means I might miss opportunity for the day. Instead of missing out for the day, let me also have a backup, which is the auto staking. So if you are considering auto staking, which is the only way you can increase your stake when working DIY for your own best outcome. So we already recommend a best way to benefit the most from DIY, then you plug into our auto staking plan. So the auto staking plan now will allow you to leverage our algorithmic trading activity, which is where the staking activity is carried out for you. Now, not by a trained professional, but by an algorithmic system already in place. So there is already a customized system that handles the auto staking for DIY stakeholders. That helps you in times when you might be weak, might not be available, may not be consistent, or maybe under the weather. So you can never tell. Rather than your own limitations affecting you, trust the algorithm to do that execution for you. Since the algorithm has already been customized, it does not fall asleep, it does not get tired, it does not get overwhelmed by activities. It was programmed and designed to carry high frequency transactions that a human person may get exhausted with. So this is where your auto staking comes in to help you also increase your stake. So that while working DIY with your minimum stake, you can also use our automated system, to handle your auto staking activity, still as a DIY stakeholder. That is leveraging the system while also using your time to learn the process, to master the process. Now, regardless of your trials and errors, and the outcome, the auto staking already has its own fixed operation that has been fixed to pay out still same 45% weekly. So even if you miss out on your own activity, the auto staking still provides you with what? The same returns you are expecting at the end of the month. Now, the auto staking is an important contribution by PSL to the staking activity of the DIY stakeholders, so that you know that the PSL system was built not to frustrate, but to improve the lives of all its members, both stakeholders, both its trained professionals, and also the team members. So play along and enjoy the outcome.
So earlier on, I showed you the correction, that is, of our hasty conclusion. Now, we saw the market when it came down to the new base that was formed. Then a bounce from there moved the price back up to test 4277 and rejected. And then I mentioned that rejection was the market telling you that it was not interested in the direction to the upside. So as at then, the market had not yet broken any of the new base for the day when the correct order of base formation was formed. So initially the order was a wrong order where the buy base had not formed correctly. Buy base is supposed to be formed below the sell base, but what we saw earlier was a buy base formed above the sell base, which was a wrong order. So the initial break of the sell base deviation limit did not matter because the market had not yet formed a correct buy base. So the anticipation was for price to form the correct what? Buy base, and then we can begin to expect the direction of break of its deviation limit. And that was what happened finally. After the market formed the buy base, the market bounced off the buy base, went up to reject the previous sell base deviation limit ROEL1 at 4277. That rejection signaled the market refusing to play into the direction of the buy that was suggested when it initially broke the deviation limit of the sell base that formed when the correct buy base had not formed. So now that the correct buy base has formed, it is time to observe where will the break happen. Will the break happen in the direction of the buy, or will the break happen in the direction of the sell? The direction of the buy will be that the market will have to go back to break the intended deviation limit of the initial sell base that formed. And failing to do so by rising all the way up to 4297, the market has one other base, which is the counter base, to attempt to break. And that happened. The market broke the base at 4241. Having broken the base, the market now dipped down to engage the deviation limit of the buy base at 4211. Okay, so from the break of the deviation limit at 4211, the market has just one more journey to do, and that is to go straight down to 4141 as a first projection, and then 4111, that will be the final projection. So all this happened to prove that the powerfully scientific trading method can accurately project the market direction. And with this, we are sure that we can handle all our stakeholders' funds successfully. So if you are yet to choose to work with the PSL Luxury Lifestyle Brand, you have to choose now to become one of our ventures funders, because our projections always give us a minimum of $100 and up to $300 per setup. But we target $100 per week, so which means we can always pay out all those who have bought their stakes in one of our new hubs open. We expect to see you start taking the decision right now. Choose to become a PSL stake funder so that you can also have your ventures that earn you multiple income automatedly. Thank you, and see you in our next episode.